Tesla had a major setback when China's zero COVID policy forced a shutdown on one of their largest manufacturing facilities in Shanghai this past quarter. So, does it mean that Tesla won't be able to carry out their production goals for the rest of the year? Well, we're going to find out tomorrow. That is July 20th, 2022, after hours, which, by the way, I will be live for. So make sure you subscribe and hit that notification bell as I will give my reaction and have you guys react with me as well. It's always a great time, and I'm usually pretty early on those earnings reports as well. You're not going to get them earlier on CNBC or really anywhere else. So make sure you're tuned in then. The electric vehicle giant has already reported on Q2 deliveries, so a key emphasis will be on the expected production rates out of Berlin and Austin for the rest of the year. Margins are also going to be a big concern here as well. Prices for Tesla vehicles are up 25 to 30% just from a year ago, but it's uncertain if this is able to be kept up with inflation costs, especially after Elon Musk warned Austin and Berlin were money furnaces because of the production ramp that's been slowed by the supply chain issues. Also, watch if Tesla's Q2 free cash flows number surprises to the upside or disappoints. The consensus estimate for free cash flow was around $2 billion at the beginning of the quarter, but now has been guided to $500 million. Some are even speculating that Tesla breaks even on that front and that this would have an impact on whether or not buyers will step in. Given the comments about setting money on fire from Elon Musk, this might be an important metric to keep an eye on. Deliveries guidance from Tesla has been pretty ambiguous for the last year, but Wedbush Securities thinks that the automaker is on pace to increase by 50% on deliveries this year, even with the China shutdowns. Analyst Dan Ives thinks that the reiterated full-year deliveries guidance could boost long-term EV demand around the stock. And so that's, in my opinion, going to be something really important to keep an eye on. EV publisher Electric reported that Tesla Energy has been actually doing really well. This was an area where they just continually lost money. They've had their best quarter in years for residential solar in the US with 71.5 megawatts. The final number could be even higher with this further deployment in commercial market and other regions. This is going to be something that, in my opinion, it will be really important to watch, especially as energy costs continue to go up. The conference call is likely to include Elon Musk as well, which he's been touch and go on that front, and it could even veer away from the financials and production into some of the other battery technology talk, as well as FSD, staffing, the upcoming AI day, which is highly anticipated, or even the thinking on Bitcoin holdings and the balance sheet. Where is he going with that? Is he planning to buy more or what have you? Musk is unlikely to say much about the Twitter deal, although I'm sure people will ask about it. I'm not quite sure what's going on there. Maybe we'll see if he actually makes any kind of comments in that regard. I don't think that he'll shy away from the comment if asked, but we'll have to see how that plays out. Next, let's take a look at the chart because that actually is setting up for a really nice bull move. Now, granted, what I will say about this is earnings always crush charts, right? If it doesn't go anyone's way, then earnings are going to really ruin this chart. However, that being said, the chart actually looks pretty solid for a nice move to the upside. So let's take a look at this and I'll show you what I mean. Before I do, though, I just want to encourage you real quick to check the links down into the description. If you guys haven't been following me for a while or you're just joining the channel, I want to let you know that I'm on a brand new journey in a whole different city. I'm originally from Baltimore, and now I'm down in the Charlotte area. I am kicking off a massive move and change within the channel, and I'm building a state-of-the-art studio as well. It's going to actually welcome in all kinds of other creators in my space or wherever. We're building a huge media company. And if you want to find out more, click the links down in the description, go to themedify.co and get our newsletter and updates there. I know a lot of people have been asking, so I wanted to make sure that I addressed it here. Okay, so this is a pretty interesting development on Tesla. You can see that I had marked the downtrend in Tesla in months past and kind of just left that there to see how things would play out. But this is really worth noting. Look at the bottom here at $620 per share. The trend just can't be ignored. And this is what is called a double diamond bottom, rather, where you see this bottom here and the trend kind of represents a diamond. And the move upwards, the momentum has certainly been going in the right direction, we'll say. I love the trend here. Let's go ahead and just draw a trend line from this bottom at 620 all the way up here and how it's been moving virtually since the downturn on all of tech. So since May of 25th of this year, it's really just been moving upward. I think that this trend here certainly would be likely to stay. And even if we get disappointing numbers on earnings, the lowest I could see this coming down to is maybe to retest the bottom of this trend line at around $692 per share. With it trading up at 741 here in after hours trading as of this recording, this to me is probably going to be the likely momentum tomorrow going into those earnings. So don't be surprised if we see a break over $757 a share, which appears to be a resistance for the stock as well. What I really like about this diamond bottom is that the average pattern, the average run off of a diamond bottom for Tesla stock is about 41 days. You can see this is indicated by Webull. Inbound trend duration is around 95, which we've actually followed through with. So I think, at the start of this diamond bottom formation, we still have plenty of room to go to the upside. This isn't a guarantee, by the way, that they're going to do well after earnings. But if they do and come up with some solid numbers, I think that Tesla has the potential to really make a strong move, a very strong move. The expectation here is that they might not do well because of production and because of supply chain issues and because of all the other incurred costs revolving around inflation. But if they can pull this off, and we've seen them do that before, Tesla will likely skyrocket. Either way, in my opinion, I don't think it's worth selling it at all. Of course, there's risk buying it going into this, but if you're already a holder of Tesla, in my opinion, this isn't me telling you what to do, I think it's worth holding on to. But let me know what you guys think in the comments below. What are your thoughts on Tesla and where it's headed after earnings? Are you planning to buy before these earnings come out, or are you planning to wait until earnings get released so that you can make a more informed decision? Let me know what you guys think. And again, I'll be live at 3:45 p.m. Eastern time to cover these in real time. I would love to see you guys there. So make sure you hit the subscribe button and that notification bell. And as always, I will see you tomorrow.